the topic of this session is the very same of the last one. How to mobilize private capital to enhance SDG. There are three keywords here. The first one is private capital. Right? The second one is SDG. And I don't think we need to spend too much time on SDG. However, to combine the private capital and SDG is not very common, because we all know that private capital has one very simple objective, which is the profit seeking. But SDG, as far as we know, many of those are trying to help the underprivileged populations, such as, the first one is to eliminate poverty, and the second one is to eliminate hunger. So how those profit-seeking private capital can help those underprivileged populations? And this is a very fundamental question. And it's probably one of the reasons that in this title, there's another keyword, which is mobilize. Because the direction of private capitals are typically in the opposite direction of helping those underprivileged people. And that's probably one of the reasons that we get together here, get to hear all the practitioners in this field to see how we can resolve this intrinsic conflict. And we do have four very distinguished panels and speakers here. The first one will be Rosemary Adders. She is a thinker of brain trust. She has been involved in the impact investment field for quite a long time. She's an ambassador of GSG, and also she's a chair of a gender equality fund. She will be calling from Australia. And the other three panelists slash speakers are all financial practitioners. They have been involved in this financial industry for a long time. And we are very honored to have that here to discuss these difficult topics. So to begin with, let's start with Rosemary's speech, and then it will be followed by Wei Ming. Wei Ming is currently the Chief Investment Officer of Allianz, and one of the largest financial institutions from Germany. Very, very successful. He had the best performing fund in the last 2 years. So it'll be very interesting to hear his perspective. So shall we start with Rosemary?
Thank you very much, CK, and I appreciate the warm introduction, and I would like to acknowledge the other speakers, ACK Investing Association, for putting this on. As is the custom where I come from, I acknowledge the Boon Wurrung of the Kulin Nation as the traditional custodians of the land, and I pay respects to them, but also to the history and cultures of the lands and peoples on which all of you are situated. So as CK said, the focal point for this conversation is about mobilising and directing more capital to the SDGs. The SDGs are universal goals, as many of you will know, and they really are most comprehensive global roadmap for need and for risk, and also for opportunity. So here we are in 2021, and the reality is that our collective actions are harming the planet to an extent that's putting life as we know it in jeopardy. The science and the data on that are clear now if you've read the IPCC reports and the trend post-pandemic in development goals. So moving more investment to achieving the goals is a structural issue, and it's going to need some structural solutions. Over the last couple of years, the pandemic has really provided some abject lessons for us in the interconnection between social, environmental and economic issues, and the kind of paradigms that CK was referring to, where we say we make money over here and we deal with the other issues over here, are not serving us well. Economists from Michael Porter to Joseph Stiglitz have identified as a major insight of modern economics that actually we've had a real misalignment of the social, environmental and economic incentives and factors. And when we look around and we see the wildfires and the sea level rise and the biodiversity loss and insecurity and the displacement and suffering that that's causing and the impacts on people's jobs and livelihoods, we see that this is not just economic theory, it has a really human face and a real effect on our planet. And there's a clear cost to inaction. The status quo is just not an option. We're seeing movement of capital, and I'm sure you'll hear from others today, but the trillions that have been pouring into socially responsible and ESG investments over the last few years, while it's welcome, is not yet directing that capital sufficiently away from harm and into solutions that will take us closer to the SDGs. In fact, in the last couple of years through the pandemic, we've seen the greatest decline in development outcomes in 3 decades. So we need to do some things differently, and the things that got us here won't get us where we need to go. The choices and decisions that we make in the near term are going to shape the future. The good news, of course, is that humanity is resourceful, and the ingenuity that has enabled us to extract fossil fuels from under the earth and to make them into plastic spoons and packaging to hold our food is available for us to harness and to energise and to solve the problem. And where we have good ideas, where we have entrepreneurial effort, we know that that can attract investment. And there's new insight over the last few years that can inform better choices. The fundamental insight that everything we do has an impact, positive or negative, really illuminates the possibility of making increasingly better choices. And that's what's been unifying people to get behind the SDGs, but also behind impact investing as a means of accelerating progress. Everybody has a role to play in this, and we will need more than pro-growth strategies and redistribution and the conventional strategic asset allocation to get us there. Not even net zero, though, needs to be a zero-sum game. We can take a broader conception of government's role in order to enable markets and to spur the kind of activity that will see more capital flow. There's lots to say on this, and for those who are interested, I'm happy to direct you to some resources where we've really dived into this in detail. Importantly, we need to go beyond some of the binary solutions and the silos that we have been operating in, because the way forward can't be a contest between public and private, between profit-driven and social good. No one sector holds all the levers for creating the kind of value that is going to be needed to meet the SDGs. And I know from my own experience working in all sectors that no one has a monopoly on good practice either. The stakes have really never been higher for all of us to look at how we can place business and market actors as key collaborators with governments and others in delivering and expanding social and economic value. And to do that, we will need innovation for environmental and social progress, reforms that drive innovation from all sectors, and the experience that we can draw on in order to be able to move faster. And that's where some of the global networks come into play, and groups like the Global Steering Group that have grown now into more than 30 countries and have access to leaders from across sectors, from across geographies, from across culture, looking at the way different markets have responded. And the important thing is that's really helped us identify areas of infrastructure and ways of working that can be adopted now to enable us to move much more quickly. And lots of tools have been developed to help us do the next important thing, which is to really make impact count. New bargains have to be struck in an economic paradigm that says that we need not just more activity, not just more capital, but better outcomes as well. Governments can set the conditions that signal for this, but we need all actors to actually be picking up the point about looking beyond financial return. We cannot continue to drive financial return at the expense of people and the planet. To do that is the equivalent of continuing to dig holes in the backyard and then arguing about what size teaspoons we might fill them up with. Putting greater transparency on impact means using the tools that have been developed. And I think that beyond ESG, we have in impact developed some fantastic tools, starting with the ABCs. At a minimum, we can insist that we are expecting people to be acting to avoid harm, benefiting stakeholders, and in appropriate cases, to be contributing solutions as well. So as we look forward, we can all be part of shaping a brighter future. It's true that never in our lifetimes have we faced a challenge of the urgency and enormity that's ahead of us today. But we also haven't had the conditions laid so bare to really choose and shape the future. We can look for the opportunities where impact's inherent in the solutions and business models, in climate, in health, and in food production. We can build on what we know. And there are great examples like the organisation that CK mentioned that I chair the Board of Advisors, Sweef Capital, that is bringing capital to the intersection of health, education, sustainable food production, and areas of women's economic empowerment. We can think bigger and we can reimagine the design of cities and food systems. Lendlease, one of the biggest developers in the world, is doing that with colleagues in Milan, in the Milan Innovation District. We can tackle global problems head on and take on impact and innovation. For example, we've been working with the World Bank on road safety, one of the biggest killers of people around the world, and looking at how can we direct finance differently to get a different result. There are a number of tools that are available, including the SDG Impact Investor Platform that's identified areas that show where we can get started. The GSG has many countries driving ecosystem change. And while there'll no doubt be some false starts and we'll not get some things right all the time, we have the ability to be rigorous about many things to set the foundations. And given the magnitude of the challenge, at the moment, it's more important that we're directionally correct than precisely wrong. We do know enough to set the course and to think bigger and reimagine the future. So I hope that as you hear the stories today and see the materials, and I've provided some slides that can be shared with you after the event that get into some of the more concrete details, I hope that you are really emboldened by a vision that is about moving capital, absolutely, but it's also about stopping our planet from heading beyond the 1.5 degrees, where we halt the biodiversity loss, where people have access to clean water and good health and quality jobs, because that's the kind of vision that people can get behind with their actions and with their capital. And I'm sure we can work through these uncertain times together. The catch cry of the moment, I think, is if not now, then when? Thank you.
I think we can hear the urgencies from Rosemary's message. She mentioned that we cannot maintain the status quo. And then at the end, she said that if not now, when? And so there's definitely a sense of urgencies. And that's why we need to find a way to mobilize the private capital, which is not very easy. And for Wei Ming, is in the position who he controlled maybe a couple $1 billion fund under his jurisdiction. So it'll be very interesting to hear how he will help to mobilize those private capitals into these directions. Wei Ming?
Okay, can you hear me?
Yes.
You can hear me, right?
Yes.
Okay.
Yeah.
Thank you, Ms. Chen. It's truly my honor to attend this meeting. At the beginning of your introduction, you give us 3 keywords. The first one is private capital, right? We are private capital. The second one is SDG. We do have SDG aligned strategies. That's part of our overall product offering. And the third one you mentioned about the mobilize. Actually, we can probably at the end of my presentation, I can provide some of our thought on from Taiwan's perspective, how to mobilize capital for the impact investment. But at the beginning, hopefully, I want to first talk about, hold on. Can we go to my second page, please? Before I start my presentation, I think it is important to let you know the definition of impact investment at Allianz Global Investors. For us, impact investment is an essential component of our overall sustainable investment strategy. So here I'm saying sustainable investment strategy. Okay. Therefore, In the first part of my presentation, I would like to introduce sustainable investment at Allianz GI. Next page. Allianz GI, actually, we have over 20 years of experience in sustainable investment. As a broader sense of sustainability, our first social responsibility portfolio was launched back in 1999. In 2007, Allianz was among the first group of asset managers to sign the United Nations Principles for Responsible Investing, or UNPRI. In 2015, we were among the first 3 asset managers in the world to offer a green bond strategy. Later on, in 2017, Allianz was awarded the highest A+ corporate rating by the UNPRI due to our ongoing endeavors to promote ESG strategies and good corporate governance. We have been awarded an A+ rating in every year since then. At Allianz, we offer a wide range of sustainable investment strategies. As a starting point, oh, you haven't seen the presentation yet, but never mind. It's actually at the bottom of this page. Every investment we make is subject to an ESG risk assessment. Beyond that, we also actively engage with companies to improve their ESG performance. Our ESG risk-focused strategy takes sustainable investment to the next level. Actually, can we go to page 4, please? Yes, here. Our ESG risk-focused strategy takes sustainable investment to the next level. This strategy pursues not only an objective of delivering sound financial returns, they also take ESG factors into consideration to mitigate investment risk. Then we move to sustainable product category. Even more rigorous standards apply to our sustainability-focused strategy. In this strategy, we actively assert our sustainable objectives and values when constructing our investment portfolio. Finally, impact-focused is a strategy which we use to drive measurable and quantifiable sustainable outcomes in our investment, while also achieving appropriate returns. Next page. This slide shows you the breakdown of our AUMs across different sustainable product categories. Of an overall AUM of 633 billion euro, 133 billion, or 21%, is managed under the ESG risk-focused category. A further 135 billion euro, again, roughly 21%, belongs to the sustainable product category, which include both sustainability-focused strategy and the impact-focused strategy. Since today's forum is about impact investing. Next page, please. Since today's forum is about impact investing, on this slide, I would like to show you exactly how we define impact investing. The watchwords here are measurable and quantifiable. Through impact investment, we want to bring in measurable and quantifiable social and environmental benefits. Under impact investing, each portfolio will target a clearly defined problem. Since the impact needs to be measurable, we set up KPIs for our investments. These KPIs are linked to our sustainable goals, such as reducing greenhouse gas emissions, conserving water, waste recycling, or promoting a fair level of income. In the second part of my presentation, I would like to discuss Taiwan's current ESG status and our suggestion for how to better implement a comprehensive sustainable investment strategy in Taiwan. While ESG already become a buzzword in Taiwan's financial market, our ESG infrastructure in Taiwan is far from sufficient. From an investment manager's point of view, information disclosure is the key. Without sufficient disclosure and data quality, it is very difficult to meaningfully analyze a company's ESG performance. Let's start from reporting. Out of 700 companies traded on the Taiwan Stock Exchange. Less than 600 companies have issued a recent CSR report. Moreover, the quality of CSR reports varied from company to company. It is difficult to compare data even from the same industry to rate the relative performance of each company. The situation will likely improve in the future. Starting from 2023, more companies will be required to issue a new sustainability report. This new report will also follow more rigorous international standards, including those from the TCFD and SASB. With this gradual improvement in reporting infrastructure, we believe it will become much easier to measure progress towards our sustainability or ESG goals. Okay, next, we will need to have a clear definition of what exactly qualifies as a sustainable product. Ideally, our product definition should be in line with global standards such as EU taxonomy or EU SFDR. A comprehensive set of guidelines is needed to assure product standard and eliminating greenwashing. Only by doing this will we be able to effectively promote the development of sustainable investment in Taiwan. Lastly, this is specific for Taiwan. We need to keep in mind that Taiwan, like any other global market, faces challenges and circumstances that are unique to its own. For impact investment, we need to have our own set of KPIs to solve our own problems. Care must be taken to ensure that we account for the specific business environment, industry structure, and the political considerations prevailing in Taiwan. Only in this way, we can better generate outcomes that deliver the greatest benefits to our future generations. And this ends my presentation for today. I thank you all for giving us the opportunity to share our visions for sustainable investment. Thank you.
Thank you, Wei Ming, for your sharing.
Thank you.
I was being introduced, I'm the chairman of Be Current. Be Current is the first early stage venture fund dedicated 100% of resources in impact related startups. So I hear Wei Ming's explanation about the ESG and measurable and so on, and I do find there's a gap, either between practices or the concept or the stage of the companies, that in earlier stage, startups that is focused or has the vision to create an impact, and a lot of them are dreams, okay, or visions that is very difficult to quantify. And ESG has been such a buzzword recently in Taiwan. And a couple of years ago, we did look into the ESG and found that in Taiwan, I think this is a good concept that we all need to promote and then start to permeate it into earlier stage startup companies. I really appreciate the sharing of two speakers from remote. And we also have two panelists sharing the stage with me. We have Rebecca Yang. Rebecca is running the investment activities at Taiwan Life Science. And also we have Stephen. Stephen has been with DBS for 20 years. The last maybe 7 years you were stationed in Taiwan and just recently retired from.
Still helping out in the office.
Oh yes, still as a consultant. But I think one most important endeavor that Stephen has started is to pursue your PhD degree in Taiwan University. And I think that is a sign of sustainability, sustainable learnings. Yeah. Perhaps I can ask Rebecca and Stephen to quickly sharing any comment you have toward Rosemary or Wei Ming's sharing. maybe starting from.
Hi, I'm Rebecca. When I heard about Wenming's presentation, I think it's really important to have the keyword as measurement. So within Taiwan Life, we do have a scoring card before we make any investments, and we engage third-party consultant to continuously refine those scoring cards, and the cards just get longer and longer, like every quarter. And I think it's very important not only for our colleagues to understand the companies that they intend to invest, what they do, to actually participate and to have an impact on their activities or their business models. I think it's also continuously grow the concept to our colleagues that we are allocate capital, which is a responsible capital, which is patient capital. And it's important for us, for ourselves, to continuously understand the importance of SDGs and what kind of impact we can contribute to the world and to the society.
So my journey into impact investing or sustainable investing actually came about 2 to 3 years ago. So I do a lot of volunteer work in trying to help also contributing to some startups. So I've been a volunteer in an incubator actually in Taiwan since 2014. And then later on, thanks to DK, who gave me an opportunity to learn more about impact investing. So when Ms. Brandenburg, your teacher, TK actually was my teacher in impact investing. So my personal journey, I think about private capital. So when I worked on a paper last year on the ecosystem for impact investing, I brought into 3 categories in financial markets terms. So you have buy-side actors. Now, in the academic world, you say actors. Actually, usually you just say participants, but in the academic world, you say. So they're buy-side actors, like Rebecca. Okay, they're buy-side actors. They're infrastructure actors, like TIIA, and like KPMG, for example, the service providers. And they're sell-side. Sell-side actually meaning the companies who actually need those capital. So in my finance career, 30 years now, 12 years with JP Morgan and close to 20 years with DBS, I've been always on the sell side because I was on investment banking for mergers and acquisitions and leverage finance and equity capital markets and debt capital markets, always representing the issuer and the seller, basically sell the company. But in recent year, since I do some also personal investing, so I am also an actor in private capital, but of course a much, much smaller amount relative to all these big players here. So, but honestly, since 2.5 years ago, since this concept came to myself, okay, from various sources, I made my first ESG investment, and I couldn't really say impact investment because I didn't go through a vigorous, even for it's my own money, I didn't go through a vigorous due diligence process to make sure that the measurements are there. But I did invest in a company this year in, should be called a B round. So this company
Early
is already.
stage, yeah.
Well, it's a B round. No, it's 10 years old.
Still
Yeah,
private company.
private, still private. Not quite pre-IPO, even though they wanted to go IPO, but I think it probably will take 2 more years. So it's already been invested by 2 institutional investors. So it's like GIC is I think a 17 to 18% shareholder, and JAFCO in Japan is like a 7%. So they do actually paper-based, environmental friendly packaging materials. So this is what this company does. And so since actually a year or 2 years ago, before I never thought about whether when I participate in the investment, there will be impact along the ESG line, but now I do. So with my limited personal pot of money.
When you make these particular investment decisions, which comes first, impact or financial return?
Both, I would say both. As in the spirit of impact investing, it's both. Yeah.
But whether the impact, the level of impact, the degree of impact would affect your decision of financial returns?
It has, because it has a higher risk amount. I hope that despite the higher risk, it will still achieve the hurdle rate that I hope that it will achieve.
Great. That means that when you can make this decision based on your financial considerations, you put some hurdle rate there.
Yeah, everyone, I think, want to make money in our investment.
Correct,
So
correct,
everyone might have a different threshold of
I
hurdle rate.
But I think that's a great difference between maximizing the profit versus establishing a hurdle rate,
Right.
kind of a minimum
Well, the
return.
hurdle rate also changes along, because it really depends on where on the
Yes.
spectrum, right? So you
Yes.
have to adjust for the risk taken. But this one, definitely, I think this is a higher risk versus the return that I'm targeting. So it is not really try to lower the return, but I'm tolerating higher risk. And I also hope that, because right now my personal investment philosophy is I only invest in company that I have engagement at the board level, at the target company, or top management. Otherwise, I won't, because this is hopefully I can also make my contribution, and my small contribution, whether it's capital or intellectual contribution, can lead to actually some impact.
Well, it's always intriguing to me, the decision making between investing into public sector and the private sectors, because the risk factors are very different, and expectation from investors are also quite different. I assume, Rebecca, many of the new investors are coming to you, and you're probably also advocating some ESG or SDG focused fund to them. So what is your typical message to those incoming investors?
Actually, I think echo to what I just said, that we do also have a hurdle rate that for different asset class of the investment we make. And I think no matter it's in public sector or in private sector, we do wish to see the underlying portfolio company or the managers, they would be able to more proactively engage in their daily activities. Not just, I think having a book or having a principle guideline of SDGs is not enough anymore. They have to show us proactively what they have done in terms of implement those guidelines. So for example, when we engage with our new relationships with PE funds or infra funds, we do ask for examples of what they have done in the past and how they actually contribute or help their underlying investments to be more involved in this field. And it will be a record in our quarterly reports or our post-management records.
So the company internally also put that as a part of the KPI for the internal investors, right?
Yes, yes.
Yeah, that's great. Specifically, I don't know whether Stephen, while you were still at DBS, or Rebecca, in your current position, whether your organization has adopted any policies to encourage the capitals flowing into the SDG or ESG segment.
Only a very top broad level.
Sure, of course.
Yeah.
Because our, the name of our panel is Mobilize. So I'm trying to find out how we as a financial industry practitioners to mobilize that. Please go ahead. Hello is great.
Well, a few years ago, we started to make loans at DBS. So we do need to actually have another checkbox. It's basically our clients. So when we make loans, we have taken actually ESG into account in our evaluation. So, and also I think on the CSR side, DBS has a foundation that we do actually make grants to companies that has innovation and also social impact. And then we also arrange green bonds, social bonds. We were the first one to actually arrange like a women's livelihood bond, social
you have a-
bonds in Asia.
You do have a green bond.
Green and also social bond.
Do-
Green bond, there's a lot of them, but there are not that many social bonds in Asia at all.
Do you have a B currency?
I'm not aware of it.
This is very important. Maybe you should try to invent one, because one of the audience asked me, we being a B current, that's the name of our company, B current, and this audience want to know more about B currency. So maybe Rebecca, you can consider that in the future. It'll be like a very attractive, I think, this term. But officially, 活水 English name is a B current, not B currency. But thank you for asking the question. Yeah. I don't know, Wei Ming, can you chip in on this subject? What did your organization do to entice more investors to invest in this area?
Well, actually, over the last 2 or 3 years, we have been working on the groundwork, the infrastructure work. So as I mentioned in my presentation, now our investment is 100% risk assessed, ESG risk assessed, which means that for every company we invest, we do look at their ESG profile. We not necessarily exclude them from our portfolio, but we do want to know what's their performance for ESG. Apart from that, we also want to know what have they done to improve their ESG performance. We actually engage with companies, talk to them about their environmental issue, about their governance issues, and I actually try to encourage them to improve their overall performance of ESG. Especially in this year, we have been using our passing voting right to vote for or vote against the company to push them to do better on every aspect of ESG. So that's what we have been doing in Allianz GI Taiwan. And globally, of course, we have done a lot more things. We have specifically promoting this kind of impact-focused portfolios and the sustainability-focused portfolios. Actually, I'm in the working group in our group that we constantly, every month, we have discussion with our colleagues in Europe to how to improve our ESG performance and how to set a KPI for our impact investment portfolios. So that's all we have been doing. But Mr. Chen, you just mentioned about the investment, lead the private investment into the smaller companies. I think that's for investment. I think that's a distinction between investment and charity. Okay, we do provide a lot of charity every year from our company, but investment need to be profit driven because we have investors behind us who want us to generate profit for them. But increasingly, we are seeing more and more investors, they are willing to marry both their social goals, their ESG goals, along with their profitability. I need to say that the sustainability goals and the profit-driven goals are not always hand in hand, but again, they are not always against each other. So we need to try very hard to find the kind of between these two goals and to find the best point for our investor. That's what we've been always trying to do, and we'll continue to do that.
Well, women, that's great that you point out the difference between that. Actually, when we say private capitals, there are actually two types of private capitals. Right? Private capital invested into public market versus the private capital invested into private market.
Private market,
right?
Okay.
Private companies, right? And that is, these two segments has very different practices. And as you say that they may not be completely contradictory to each other. However, the objectives and practices are quite different. And that's one of the reasons, at the very beginning, I talk about right? The mobilize and also the private capital, the motive and also objectives and the measurement. The measurement is a very, very difficult things. If we look at SDG itself, 17 of them, some of them are intrinsically difficult to make profit. Like I mentioned, right? If you want to eliminate hunger, how you can make profit out of, trying that kind of efforts. But I think there must be some priorities can be, arranged, such as if some of those SDGs are like infrastructure. Right? If we enhance the infrastructures, then we have a better probabilities to eliminate poverty. Right? So I want to ask, the panelists and speakers, among those 17 SDG goals, do you see them as a collective, goals, and do not provide any differentiation among them, or you have seen some, differentiations and priorities when we talk about the SDGs? So, well, Rosemary, you're welcome to chip in from remote if you.
Yeah, thank you for that, because I think there are a lot of intersections between the goals. So when people think about the priorities, I would encourage you to think about them not as individual goals, but as related goals. And so some of those things, like, for example, even alleviation of poverty, can be advanced through having better health systems that mean that people aren't, out of work and put into catastrophic poverty because there's not the available support to them. Education systems which make people better equipped for entering the workforce. The food supply, and all around the world there are areas for improvement in even basic things like grain storage facilities, for example, where so much production gets lost, which can help to ensure that we can reduce the goals of hunger and also poverty. So I would encourage people to follow what I call the cross-cutting goals, as well as the individual goals like gender equality. When you start to think about those types of goals, if you think about how do I invest in gender, that's a tricky question. If you think about how do I invest in sectors where women are majority of the workforce, that are also sectors that are going to grow significantly, like health and education. How do I think about the areas where women are consumers and have a lot of buying power, increasingly so, and often have discretionary spending for their families? That takes me into, sustainable food consumption and into areas like health and education again. So I think sometimes it's how we think about the goals in terms of framing the question that gives us a broader landscape. And while I am speaking about how we can think about these things, I'd also like to pick up on your point, Mr. Chen, about practice. So I think the measurement is important, but the practice is also really important, and how we think about the goals in the context of having a management system and women and others. We talked about examples of how they're dealing with that through the life cycle of their investments. I'd encourage people to look at leading best practice like the SDG impact standards that actually start to unpack how you can think about the different goals in the context of setting your asset allocation, your investment strategies, and then managing for impact, including identifying the areas where you might be hitting more than one goal. And at a minimum, to ensure that we're trying not to make slow down or go backwards against any of the goals in the investment decisions that we're making. Thank you.
Great. I think you hit it right on the head of the nail, that those 17 goals, although they look distinctive, however, many of them are interlinking or interlocking. So, it's kind of like a priority and also a sense of urgencies considerations. I want to check the time because right now it's almost 12. Supposedly we should end at 12. Shall we do that, or shall we started a little bit late, so I just want to make sure, who control the time? Me control the time. Oh, 12:10, so we have 10 minutes, okay. Any questions from the audience? Well, you still can think about that, and I have another question that I want to ask the panelists here. The last one of the SDGs about collaborations, okay. Many of those issues are very, cross-border issues. So, in your experience, how do you, in your organization, facilitate these cross-border collaborations of any type of project related to SDG? Maybe starting from Stephen?
Well, I'm still part of, on a part-time basis at DBS. So we, as I mentioned before, we do have a foundation that actually will make grants in all the markets that we covered to support actually social enterprise and basically innovative social enterprise. And I think we want to utilize our network to help them in terms of expanding the markets and also the business cross-border, at least to the coverage markets that we can help with.
That's great. Rebecca?
I think when we talk to our managers, we do update them on what we are looking for, that and our internal requirements, then for them to understand what degree of SDGs involvement we would like to see in their organization or in their investment program. But I do want to add another comment to the previous question regarding the 17 goals of the SDGs. I think just some of the goals are just easier because there are more direct investment opportunities in those categories. For example, like offshore wind in Taiwan, right? We are the first one to participate in the offshore wind financing as well. But related to the other goals, I think they are a chain of good effect and also a network effect. For example, I think technology is a very good field that we should invest in. For example, we have a seed investment program within our firm that we invest in technologies that promote financial inclusion and that promote more access of the health care program to the individuals. And I think the development of technology actually facilitate and encourage the development in those categories. So those are more indirect investment opportunities, but also be able to contribute to the effort. Thank you.
Yeah, I agree with you.
Can I compliment one more thing? Because I really am attending this conference on a personal basis, more than representing an organization. So especially for the media friends, please look at me as a private investor, mobilize my own private capital, could be for...
We need this role more than the institutional roles.
Right, so I think, because there are a lot of compliance issue in terms of representing an organization. So I have to clarify, I'm not really in that capacity today, but as a private individual contributing private capital for impact investing and sustainable investing. So please, especially the media friends in the audience, please take note of that. Yeah.
We're noted. Rebecca's comment, I agree 100% that technology is a very important factors of making these kind of difficult things happen. Technology or innovations, right? Like the poverty. So we do have a microfinance, which is innovation. Because with that, it solves a lot of other related things. Any comment from remote? Rosemary? Or Wei Ming?
Maybe I can say something. Okay. I think to achieve all these goals is really a collaborative effort from every parties. I think private organization like us or multinational company, we can do a lot of things as well. Not just from the investment point of view, but also from day-to-day operation. So as far as I can remember, yesterday we just have an internal meeting to talk about our annual donations to different charities and foundations in Taiwan. We decided to donate to 19 foundations in Taiwan. And we also decided for our internal spendings, every company spendings, we try to use our own budget to, for example, every company has a marketing budget. We use this marketing budget to support some of the organizations that promote, for example, the quality of education, to improve the quality of when we enter in the aging society, and also to promote the good health and the well-being of a whole society. So I think the corporate, apart from investment, we can actually do a better things to the society from different angles, also from the charity point of view, from the corporate spending point of view, and also from our company. When we do any, in any of our spending, we think about, we want to find the suppliers that is kind of a ESG qualified, they can protect environment. All these things we can do to improve the whole society. So that's another part of things we can do as a corporate, not just from the investment point of view.
Correct. I think currently in the business world, corporation has become so big. They have amassed so much resources. So by having either CSR or ESG practice, there's a way to educate them to channel some of their resources to the proper areas. Rosemary, do you have any comment on the cross-border collaboration?
Yes, thank you. I think there's a huge opportunity, because what we've discovered through the work of the GSG and National Advisory Boards is that often the circumstances in countries have more in common than they do apart, and where there are differences, we can learn from those as well. And I know that Joe Shui is taking a panel this afternoon, and he and I worked together on a systems map of how we could think about mobilising the levers to be encouraging more people to be incorporating impact, and then to be improving the practice, which builds confidence, and data, which helps to bring more people on board, which helps in turn to improve the practice. And we can definitely think globally across about that kind of cycle. And enough's been done now that we can use what people have done elsewhere to accelerate progress in that way. And if we think about, how do I learn from the global experience? How do we adapt that for our circumstances? And then what can we take in lessons that we play back into the global system? Then it really helps everybody to move faster. So I think there's a huge opportunity. We also need to ensure that the spirit of the SDGs, which is that nobody's left behind, is honoured in the way that we work, and that means that that for those of us fortunate to live as I do in a high-income country, that we also think about how do we interact with our neighbouring countries across the region, and more broadly, how do we ensure that we're sharing the benefits of what we're learning, and indeed, coming back to Rebecca's point about technology and some of the lessons we're learning through this, that we can help others really springboard to a brighter future in the process.
Thank you, Rosemary. We have one audience who raised a question. The question is, if there's no profit, then the company cannot sustain. So this is actually not a question, it's a statement. It's quite true. I think it echoes Wei Ming's point very well, right? You mentioned a donation twice, at least twice. That I think all of us agree that NPO, there's a place for NPO. There are some business or some activities that cannot be arranged or accomplished through a profit-seeking organization. So there will be always a position for NPO. But let us take a pause now. Okay? Let's assume there are two investment opportunities. One is the traditional profit maximizing and no mindset of impact. Okay? But in their charters, they say, I'm going to donate 10% of my net profit to charitable activities, okay? So that's okay, company A. If this is company B is impact-minded companies. They also make money, they do a lot of things. Let's assume the net profit, the profit of the company B is half of the company A. Okay? So will you invest in the company A or B? And this question get to all the speakers and panelists.
Well, then it doesn't matter whether even company A donate 10% of the I mean, there's several factors in play here.
Make it easy.
Yeah.
Make it all the other factors
all equal.
No, yes, all equal. Only two considerations.
Yeah.
One is non-profit, non-impact minded, but 10% get to charity. The other one is impact minded, okay, but they make total less profit.
It really depends. But if you point a gun,
this can be your dissertation for your PhD.
it belongs to the psychology department. Yeah.
Understand.
I think if there's a gun pointing to my head, then I'll invest in the one that make less profit.
The company B, right?
Yes, B.
Okay. Rebecca.
If it's my personal capital, okay, I'll do company B as well, because we are talking about maybe it's their current profit, but we have to think about the long term, the profitability they may generate. We can just take Tesla as example.
Great. How about Rosemary?
So I might not invest in either of them because I'd be asking why company B isn't making more of a profit, and I'd want to know what company A is doing. But if I had to choose, I would probably invest in company B on the basis that it was hopefully managing its risks and building a more sustainable platform for the future.
Great, thank you. Wei Ming.
I think it's about asset allocation. Go back to my own industry again. Okay, personal and the company. Let's talk about company first. As an investment manager, in the past, I have to say in the past, we only consider two things, profitability and risk. Okay, not always profitability. Risk is also a very important factor. But increasing, we also need to consider sustainability factors. And that is increasingly important in our investment. And I can only see that it's going to be more and more important for sustainability factor in our investment. That's for the company. And personally, of course, it's always to do with asset allocation. I would definitely allocate part of my asset into the B, but A, probably I will allocate some of my asset into A as well, because A is not always negative. You can see there are a lot of consumer goods. They're always in their advertisement. They say they're going to donate a certain percentage of their revenues to the charity or something like that. And it's one way to entice us to buy their product. So I will probably invest in both companies instead of just buying one.
Great, you're hedging all the bet. Yes. It's just solely by coincidence. Our company is called B Current. So we choose B. Well, I think that's end of our time. Thank you very much for your participation and listening to this session. Thank you very much. Thank you. Thank you for the panelists and the speakers.